And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Today is Monday, the first day of the quarter, the last quarter in 2022. And I believe we are going to have some fireworks here. So it is a new week with some new opportunities on the board. First thing I want to take a look at is the dollar. I'm going to jump into some Bitcoin price action. I'm going to cover the main news things running around the internet right now and how it could all impact crypto. And in fact, I think the most important thing here to keep our eyes upon is the US dollar, and to just, let the cat out of the bag right off the bat. On the 5-day time frame, we just had a tick below this guy, which leads me to believe the dollar will head down to about 110. And so the big question is, as the dollar comes down, is Bitcoin going to bounce alongside with traditional markets? And today, NASDAQ, S&P, and Dow all getting in putting in a little nice bounce here as the dollar declined today. And this is the daily on the dollar. And I would say this, if we do close with a bearish engulfing candle, actually it's not completely engulfed. But anywhere below here very likely gets you a shot to the 21, which is ultimately going to lead to probably some further downside price action, maybe around this 110 figure that we have there. And I might even line this up a little bit more somewhere in that area. And yeah, so as the dollar has come down, you've seen NASDAQ put in almost a bearish engulfing candle. Alongside S&P, just about to do it there for the S&P. And I would say that would probably give us a bit of a bounce alongside some bullish divergence, price making a lower low, RSI making a, nope, that's lower low. So maybe no bounce from there. What about this point here? No, do we have any higher lows? It'd have to come all the way back from this guy right here in, that was the January 2022 low. And so, yeah, question is bounce or not. And I think it all hinges upon this guy right here. And on the 4-hour time frame, volatility is beginning to increase and Stokes are crossed down, and yep, it does look like the measure move off of this is going to hit in the next hour, which is going to be just a little bit south from here at 111.31 with continuation down to about 110. So here's the important key levels for Bitcoin before I jump into some of the silly news that's out there right now. On CMEs, here is the time frame to really rule them all. It's been holding this range here, this pivot at 19,695. And any kind of a 4-hour closure above 19,695, I am looking for a move back to the top side of the range at 20,200. We have not been able to defeat the purple 200 exponential. So usually, the first test is a sell. So although the dollar is bearish in the short term, and on the daily and the 5-day, can we get a bounce from the dollar? Let's just see where these Bollinger Bands, yeah, we're closing well below there. This thing has another 4 days and 3 hours to close. And very similarly on the 2-day, as soon as we tick below this low, we came almost down to the 9. So perhaps we could get a bit of a bounce, but Stokes are crossed down. Volatility is declining. So I am expecting a bit of sideways from the dollar and maybe picks itself up over the next week or so, which should give us the flush down on traditional markets. So again, back onto the CMEs, it's really simple levels here. And this has been the market to rule them all, governing when the next major breakout is going to happen. I'm going to take those Bollinger Bands off here, which we are pinched down on the Bollinger Bands there. We are going to cross up here as long as we stay above, or we are crossed up, and will remain crossed up as long as Bitcoin is above 19,226. 19,226 needs to hold on the 4-hour. We did have a bit of a gap down over the weekend on Sunday when CME's open. Prices came down. Not only did we fill the gap, we shot right through it. And I'm kind of leaning on more of the same here, guys. More of the sideways action until kind of one of the major events does happen. And the big major event today that people were talking about was the emergency Federal Reserve meeting. I wonder what they're doing. Wonder what they are doing. They're scrambling to figure out how to, pivot or manage the incoming financial crisis. I imagine the crisis in the stock market is going to be a lot more damaging, not to be frank or anything, but financially damaging than the tornado we just saw in Florida. It's a financial tornado that's just swirling around, and yeah, so again, levels on Bitcoin. I'm looking for a 4-hour closure above this pivot at 19,000, call it 700, or below 1885. Any kind of a 4-hour closure above or below there is going to get us the next move. The next target is 17,120, and that will very, very likely bleed into the higher term time frames, giving us a greater move down. I do believe if we close above 19.8, we'll head up to at least 22 to 20,400, somewhere in that range. If this pivot gets taken out, the next target is 21,605. And that is how I am kind of just waiting. This is kind of a no trade zone for me, in a sense. We have a lot of bearish things going on in the stock market, and I will close the session with some major points on the 2-day and 5-day time frame and the daily time frame. So if you care to stick around for the rest of the video, I'll put that at the end. But what did I want to talk about in the stock market? Now, here's what I wanted to talk about is the quarterly just closed for the S&P 500. Not only the quarterly, so did the monthly. This is the lowest low we've seen since January of 21. And it is the first time on the quarterly that we've seen 3 negative quarters since going back to when? 2009. That was the last time we had 3 consecutive quarterly closes, and you can see what happened. Well, it started in 2007 and ended in the bottom there in 2009. So that did bleed on for another 3 consecutive quarters. Talk about a bear market. We all remember that one. That led to the great financial crisis of 2008. And I believe this time we're going to call this the great unwinding of all risk assets. It's a bond bubble, it's a stock bubble, and it has been a crypto bubble. And right now we just have, a policy strike against economic growth. And you can see that here in the interest rates. I got the 2-year, the 10-year, and the 30-year, although they are coming down pretty hard today. I believe they are bouncing just a tad on the lower term time frames. But as you can see, I'll just put it on the weekly chart here. But since January this year, we went from, call it 0% interest on the 2-year to 4%, right? It's almost a 400% increase in the 10-year yield. That is bad, okay? So not only did we take a look at the S&P 500, and we talked about this, we've been talking about this 6-month bearish engulfing candle that's only happened 3 other times in history, once in 1973, once in 1929, and once in June this year. But we just had those 3 negative quarters. 3 negative quarters of S&P essentially just free falling, and we're not even down 30% yet. So just to give you an idea, S&P currently down at the low is down 25%. So what else did I want to show you regarding the bearishness in the stock market? And remember, you know, Bitcoin is just a higher beta NASDAQ. It tracks with S&P, it tracks with NASDAQ, and even the Dow Jones and the Russell. When they're going down, Bitcoin goes down. When they're going up, as Bitcoin is popping up a little bit today at 19.5, up 2.6%. You've got NASDAQ up 2.5%. You know, generally the markets are putting in a bit of a relief bounce today as the dollar is coming down, kind of cooling off from a major breakout. And just, again, on the dollar here, we're still macro bullish. We basically hit our target of 115. The next stop is 124. And the ultimate target, probably over the next 6 months, you know, is around 150. So this is a monthly chart. We're in a macro breakout. We just took out the 2002 highs, and the next stop, we'll probably get, you know, a hit around 120. And some kind of a blow off top for the US dollar, which is going to be bad for stocks. But I just wanted to give us an overall picture of the stock market because, well, some major names here really taking it on the chin. Starting it off with Amazon, which just put in another lower high on the monthly. So you've got a lower low, lower high on the monthly. That is a trend reversal, and we're just coming in and testing those 2018 highs as support. So first test is a bounce, second test is a bounce, and the third test usually breaks it. And if we do break, that'll be Amazon coming down to about 71 cents. Let's see how Tesla's doing on the monthly, doing the same thing, except for we broke through the highs again with a gap down. That's a big gap down. Let's see, what does that look like? Gap down, and looks like Tesla wants to come down to about 224 to 207 in the shorter term. Not even putting in a bounce today, down 8%. Okay, big companies like Microsoft. I mean, from the high, Microsoft is down. Well, now it's only down 30%. Nike, another big one, retailer taking it on the chin. Down 52% from the high. Meta, Facebook, down 64% from the high. What does that look like? Bitcoin? What's the market cap on Facebook? Let's just look at some of these, right? Come on, keyboard. Give me a break here. Are we really going to crap out on me right now? There it goes. First off, let's see, what's the market cap on Nike? 133 billion. So just to give you a little comparison here, that's, you know, over about a third of the market cap of Bitcoin, but coin market cap. So our top coins here, Bitcoin 374 billion, Ethereum 160 billion, Tether, not even a coin, not a coin. BNB coming in fourth on the list at 46 billion, or call it third on the list. XRP 22 billion, 21 billion. So when you've got Nike, a major U.S. corporation, not a cryptocurrency, not a, you know, doing something like this alongside Netflix. What's Netflix market cap? We all love Netflix, right? 106 billion. Let's just take a look at Meta. 372 billion. So same market cap as Bitcoin, Facebook, a major U.S. stock corporation. I mean, we all hate Facebook, but we all love them at the same time, right? Because they help us out with advertising. They help us out with seeing our families and friends and whatnot. But when these companies, Roku, down 88%. Verizon. Has anybody got Verizon? I mean, I thought they were the best cell phone service. For Verizon, down 37%, so not bad. But when you look at it on a monthly time frame, this is a top, and we took out support there. The target is on Verizon is coming down to about $30. So, and as you can see, it can go a lot lower if we start to break this region. Let's take a look at Uber. Oh, Uber. Uber did get a little bounce over the last couple of months. However, from the high to where we're at right now, down 58%. Apple's still holding on. But that is a horrible monthly closure. A confirmed downtrend. That is the trend reversal right there. Lower low, lower high, and what do you expect? Lower low. And Apple just announced what they're stopping some of the production on some of their assets. So, okay, let's jump in a little deeper into the stock market. Why? It's all relevant. You know, Credit Suisse. This is on Forbes magazine. Credit Suisse shares tank as capital concerns spark reminders of a Lehman Brothers failure. So, September 25th, 2008, Lehman Brothers collapsed, and this ultimately led to the financial crisis in 2008. You know, is Credit Suisse having a Lehman Brothers moment right now? And some are speculating, yes, in fact, they are. No, I don't want to follow you. What are the key facts? They just fell 5% today. And it says the bank is working to restore confidence with the new CEO, and they are predicting massive layoffs and financial cuts. And what is it? Making matters worse, more difficult, a series of unveiled reports linked to Credit Suisse sent social media into a frenzy over the weekend, with an unnamed large investor in the bank telling Fox Business reporter Charles Gasparini Saturday the bank is a disaster, and ABC Australia reporter David Taylor tweeting a source told him the major bank is on the brink. Whatever that means. And Credit Suisse says they have to close a $100 billion capital buffer. So what else is important to know about Credit Suisse is back in January this year, one of their traders, Bill Wang, he leveraged their real estate portfolio by $168 billion and got smoked. And I think that has to do with some of the stuff that went down in the Chinese real estate market earlier this year alongside Evergrande. And Credit Suisse is a major bank. The difference between Lehman Brothers and this Credit Suisse crisis that they're having right now is Lehman Brothers had credit default swaps, which went bust. Again, those are basically leveraged real estate deals that, you know, if they go up, well, you make more because you have leverage. And if they go down, you lose more. And that led to the collapse of Lehman Brothers. Here's the difference. With Credit Suisse, we're talking about bond portfolios, which, you know, Credit Suisse is known for being involved in scandals of misleading customers as to the safety of their portfolios. And most bond portfolios are down 40%. Again, why? When interest rates go up, bonds lose money. And if they are leveraged portfolios, well, they're going to lose even more money. So, you know, in 2008, Lehman Brothers went under. They bailed out big companies like AIG and Bank of America and, you know, the other guys that were in bed with the government and the Fed, but apparently they had to let somebody take the fall. So will Credit Suisse be the one to kind of drop the ball? I think there's a lot more problems in Europe, Japan, and in China as well. And guess what? It's showing up in the stock market. So again, when you see 30-year interest rates skyrocketing like this with more Fed rate hikes coming around the corner, looks like the 30-year is going to go up to about a 4.5, and the 10-year is going to go up to 5%, and excuse me, 10 years probably going to head up towards about 5%. Yep. 30-year, you know, 4.75. And the 2-year heading up to 5% or just over 5%. If that breaks, I mean, we're talking about 6-7% on the 10-year. So just rounding it up here, I want to start off with China's Hang Seng market. And this is going to be a major break of the range. The lowest closing monthly closure since September 2011. In fact, we're taking out the lows here from June of 2009 as well. So lowest closing low. Yeah, actually since 2009. So is that bullish when the #2 economy in the world is closing the stock market like that? I mean, let's just see the measure move off of this. That would be pretty nasty, down from 17, down another 50% from here. Based off of that closure, that wouldn't be too good. And we're already from the peak to the bottom here, down 50%. So, what does that mean for China? Oh, let's take a look at India. India doesn't look as bad, except, would that be a closing a little higher high? Technically, based on wicks, it's a lower high. I mean, give them the benefit of the doubt here. What about the 3-month? This is a top, guys. This is what a blow-off top looks like, and any kind of a quarterly below here, and this thing's going to come all the way down. All the way down. What would that be? A nice 34% retracement. I bet you it does more. I don't see how India is holding up at all. And let's take a look at the UK 100. Bearish candle here, taking out these wicks. Lowest closing low since January 21 or September 21. Yeah, that is not looking bullish, and a measure move off of something like that. I mean, maybe it's done for a while, but I'm guessing along with the rest of these markets, this thing's going to come down quite a bit more as well. Of course, not financial advice. I'm not a financial advisor, but look at the Ftse 100 here, looking really bad. Again, when you start to close below the wicks on a quarterly, on a monthly, you took out the prior, month's wicks right there. This thing could have a lot to go if we close another quarterly down here, and this is the U.S., the S&P 500 just got 3 straight quarters of down. The UK having all the problems with the currency and the bond market. Better hope your retirement is not tied up over there. What is this? This is the Netherlands putting in another massive top. Looks like she wants to come down. If this area breaks at 608, next stop is going to be 478. And what do we have here? The Germany. So I think they're the fourth largest economy in the world. 3 negative quarters. And the next stop on this one's at 353. And that would bring, and I think, you know, frankly, companies like Facebook, Meta, right, which is already down 50%. If these guys don't come down at least 50%, I'd be very, very surprised. So it does look like the old Shemitah event is holding true here. The only thing giving us a little bit of a breathing room today and in the short term is the US dollar here. So watch out for some fireworks in these markets. The last thing I wanted to follow up on is something that is, you know, at some point there are some, you know, and that's why I have the levels laid out on CMEs where all the professional traders are. But at some point you have to say, okay, are all the underlying economic environment, you know, things pointing to something else besides your one indicator that, you know, always works, right? And here's what I want to point out is, yes, we did cross up on the 2-day. What I want to see is 2 consecutive closures up paired with low volatility expansion to get the signal in place on CMEs. Right now, we have low volatility. We do not have expansion, and we define that as above 20%. So you want to regain the exponential and get above 20%. So when this gets above 20% on the 2-day time frame, that will be, you know, the signal is in place, and we're going to expect a 40% move in either direction. If the Stokes are up as expansion happens, we expect 40% to the upside. So from this level, where we're at today, 40% up, that would put us at the green 55. I think we get a little bit higher than that. Maybe 40% would take us all the way up. From here, no, that's 60%. So 40%. Maybe we test this bottom side of this range here. And I'm willing to bet that probably would line up with, yeah, that lines up with the 1618. So 2-day will not close for another 1 day and 1 hour. And if it does remain crossed up, probably the first warning sign we might get an upside move, but I would take that with a grain of salt with all the negative things happening in the stock market and in the bond market. Okay, let's follow up on the 5-day time frame as well. The average move as the signal is given, and we got another 1 day and 1 hour for this one to come to fruition. They are still crossed down and will cross up above $19,000. So again, a warning sign that this signal, the downside signal, is over. And the only thing we do not see, though, is the, well, technically we are above the 20 percentile, but we have not regained this. So a little bit of a nuance here. I'd like to see this get vertical and the exponential taken on the 5-day. Right now, it's just coming down. So, and then we want to see the 2 consecutive closures of Stokes crossed up to get the upside move. The average upside move on this signal is about 42%. So pretty darn close to what happens on the 2-day. Now let's carry this over to spot price action, where we've got a little bit of a different signal here. And the 5-day did just close and we did cross up. So you want to see 2 consecutive crosses. That means it remains crossed up on the next 5-day closure, which will not be until the end of this week. So, you know, does that line up with the dollar coming down and Bitcoin, you know, taking a, I mean, the 5-day move is a 42% move up. So that could take us again all the way up to this area right here at about 29,000. And I would say something very new and different is happening in this market. So just to keep that in mind. I think, we basically want to see things, if we are remaining with that bearish bias, probably going to turn around this week to the downside. If we're going to get a downside move, I do believe it probably continues this week. And these things can uncross themselves. That's the thing to keep an eye on as well. And what else? We have the 2-day crossing to the upside here. So this one will remain crossed up, but volatility is declining. It's not exactly vertical. So what sometimes does happen is we get the first move up. It's kind of a fake out. It resets, and then you get the real move. So just something to keep our eyes on. This 2-day stoke going to cross up here today. What is CMEs? CMEs won't cross up for another, or will not get another closure for another 1 day and 1 hour. So again, I think the shorter term time frames are going to be giving it away here, especially on Bitcoin. And that again is the 4-hour time frame, which we are crossing up. Volatility is beginning to expand, and I guess that'll make it for an interesting Tuesday to see what happens in these markets. But overall, I'm saying the overall underlying market dynamics, interest rates going up. We got the bank problems in the UK. We've got the Credit Suisse failure. We've got rising interest rates, rising inflation. And what else? The SEC going after more crypto people. The SEC just charged Kim Kardashian, I think, $1.26 million in penalties. She was touting getting people to buy in Ethereum Max without disclosing the payment she received for the promotion. Oh, that's a big no-no. I think Mayweather may have gotten caught up in that as well. All right, I think I'm going to leave you off with that today, guys. Hopefully that was helpful. And, we went across all the markets today. Bonds, stocks, the dollar, Bitcoin. How does it all connect? Well, remember, King Dollar, he's the one to rule the market at this moment. And if he wants to come down, it might give us a little bit of a breather, but could be just a little wick down and then boom, back up to the upside. So watch out for the dollar and what he does. And I'll be bringing you back some more cryptocurrency news here this week. Take care.